I'm sitting here with Anna Barsky from Chicago Title. She's a specialist that does 1031 exchanges. I asked her to be here today because we've been getting a lot of questions of people wanting to do 1031 exchange. Anna, what is exactly a 1031 exchange?
Thanks for having me, Nikki. Great to be here. As Nikki mentioned, I work for Chicago Title's 1031 Exchange Division, IPX 1031. For those of you who don't know, a 1031 is a very simple transaction. It allows real estate investors to defer paying taxes when they sell investment property. And all that you have to do is buy another piece of investment property in a specific time frame. So super easy, sale plus a purchase equals a tax deferral.
Okay, great. Well, we all like that. What is a like kind of property? So when you're going to actually do this, what does that look like?
All investment and business use real estate is like kind to any other investment or business use real estate. So you can sell a rental property, buy a commercial asset, you could sell a piece of farmland, buy an industrial property, you could sell multifamily and buy vacant land. All investment and business use real estate is like kind to any other investment or business use real estate.
Okay. And 1031 exchange, when we talk about like kind, can somebody take an investment property and buy a second home with that? That's not going to be a rental, but it's going to be their second home only.
Sure. So there's been some new regulations over the last 10 years or so regarding vacation homes and second homes. So even though it's not your primary residence, if there's zero rental income coming from the property, it doesn't qualify.
Okay.
There's a specific set of rules for vacation homes and second homes. You have to limit your use to the property and rent it out for a certain period of time in order for it to qualify.
Okay, great. How long do you have to identify new properties that you want to buy?
Once the sale closes, there's two 1031 clocks, two 1031 time periods that start. You have 45 days from the closing of the sale to identify new property and 180 days from the closing of the sale to purchase one or more of the identified properties.
Okay. And how many properties do you have to identify, or can you identify during this process?
You can identify up to 3 properties of any value. Once you identify more than 3 properties, there's a couple rules that come into play that kind of limit the identification. So most folks do stick with 3 or less, but you can identify more.
Okay. And what happens if those 3 properties go under contract or get sold before you can finish your exchange?
Yes, very common question. So the trickiest part about the 1031 is you have that short 45-day window and you can only buy what's been identified within that 45-day period. Within the 45 days, you have a lot of wiggle room. So you can identify property, revoke an identification, identify something else. But once the 45th day hits, you're kind of stuck with those properties. If you cannot buy anything that you've identified, unfortunately, it is a failed exchange and you have to pay your taxes.
Okay, well, we try to make sure that we get the properties that we can get closed on right away.
Exactly.
But it's nice to know that you can exchange properties in and out. So if one does go under contract, you can go ahead and pull that one out, correct? And then identify another one.
If you're within the 45-day window, yes.
Okay. Perfect.
That's why that 45 days is critical.
Okay, perfect. Can you exchange for multiple properties?
You mean sell multiple or buy multiple?
Like if you're selling multiple, can you take multiples and just purchase one?
Sure. Yeah, you can. And we do get that question quite a bit. We have clients that have several rental properties and they want to kind of combine the funds from those to buy one big commercial property. It is possible. The timing of that can be tricky because once sale number 1 closes, the clock starts. So you have 180 days from the closing of sale number 1 to close the other sales and close the purchase. Okay. So absolutely possible to have that structure, can be a timing issue.
Okay, that's good to know. What happens if you're taking your 1031 exchange, let's just say you sell it for $200,000, what you're looking to buy is only $100,000. What happens to that extra funds? Does that get taxed or how does that work?
So there's 2 rules you have to follow to get the full benefit of the exchange. One, you have to buy property of equal or greater value, and the value is based essentially on the contract sales price. Right. So if you're selling for $200,000, the new property or properties have to be $200,000 or more. And then rule number 2 is that you have to use all of the proceeds from the sale towards the purchase of the new property. So to answer your question, if you have $100,000 left over that's not being used to buy new property, those funds are taxable dollar for dollar as profit.
Right, but you can take that money back if you wanted to. You just get taxed on it.
That's right.
Okay, perfect. Is there anything that you see that people should know ahead of time? Like, should they get a hold of you first and get this started before we even go and list the property that they want to sell? What timeline, what does that look like for you?
Sure. Planning ahead is essential for the 1031 exchange. Getting us involved early in the process is great so we can talk through all the rules and make sure you're aware of what needs to be done to have a successful exchange, and all that information can be provided up front. There's also more complicated exchanges you could do. Like, let's say you're selling property in a partnership. You want to do an exchange but your partner doesn't. That's something we would need to work through as far in advance as possible. But really, getting in touch with you, I think, is the most important part, because if you know that someone is selling a piece of property and they're going to reinvest those funds into a new property, then Nikki can help you find that new property right away, right? She can start sourcing the replacement property, really get that locked in, so hopefully that 45-day period is not an issue.
Right. We also have a lot of investors that want to flip houses and do short sales. How does a 1031 exchange look in that situation?
Flips typically don't qualify, although there's not a specific holding period requirement. There is a rule that property held primarily for resale doesn't qualify for 1031 treatment. And that rule does speak specifically to flippers. Okay. So if your intent is buy, rehab, sell, that's not a 1031 opportunity. If your intent is buy, make a couple improvements to the property, rent it out for a year or two, then you can sell it and do a 1031 exchange.
Okay, great. And is there a cost to doing a 1031 exchange?
Yeah, so our fee, I guess I should start with our role. What's our role in the transaction? Our role as the 1031 company is that we would hold the seller's funds in between the sale of the old property and the purchase of the new property. Mm-hmm. And that's because the IRS says if you want to do an exchange, you cannot touch the proceeds from the sale. So we set up a 1031 escrow account to hold the funds. We also draft all the 1031 documents and forms that the IRS requires. That's essentially why you're hiring us, and our fee is $1,000 for the sales side of the exchange, $250 per purchase.
All right. Well, that was all great information. Looking for some feedback. If you have any other questions that you want us to dive a little bit deeper in, we're more than willing to come back and do this again and get a little bit deeper into this. There's a lot of moving parts when it comes to a 1031 exchange, and we want to make sure that everybody involved is very comfortable in knowing what is going on and try to protect your money as possible. And let's make it so you don't have to pay taxes on it.
Exactly.
So give us a call and give us some feedback, send some questions, and then we will do a follow-up video. I hope you all have a great day.